Picking on my list today, it's a thumbs up because of where the numbers are. Margin, a thumbs down because of the margin hit. Otherwise, the numbers are looking decent, but the margin hit is led by an increase in cost of raw materials. Net profit was up, partly led by other income. In fact, the other income portion has boosted a fair bit from about 9 crores to 35 crores for Paradeep Phosphates, which is why you see revenue up 58%, EBITDA up 19%, net profit up 45%. But that net profit figure of 159 has about 35 odd crores from other income coming in. Margins have come down from 10.9 to 8.2%. And a tad below estimates on most metrics as well. So Paradeep Phosphates thumbs down today and would be seeing a bit of pain. Not so much for Premier Energies, and Neeraj, you talked about it. What a stellar set of numbers. Question is valuations, if you want to look at it that way, but they are at least delivering on the numbers front. So a thumbs up on the numbers front. Their profits have risen 6x. For the third quarter. Revenues are up 2.4 times at 1,713 crores versus 712 crores. EBITDA is up 4.2 times at 513 crores. Margins also look quite pretty, to be honest. I mean, this is a good looking set of numbers, 17.3 to nearly 30%, and net profits up nearly 6 times. As I mentioned, you've gone from 43 to 255 crores. The order book stands at 4,539 megawatts. The value is at 6,946 crores. That's an 8% uptick quarter on quarter. Fulfilled volumes in the third quarter was about 1,700 odd crores, and you have new order bookings in the third quarter at 2,240 crores. So just from the point of view of, yes, run up, I know all capex led and these kind of stories are under pressure, but the fact is that the commitment to this space, to renewables, is very much there, and they've delivered on the numbers. So watch out for a Premier Energies today as well.
Yeah, and just, Tamanna, I was doing I just annualized the 9 months profits to 12 months, right? And then you look at the market cap, and if people say a lot of these stocks are expensive, it is trading at 54 times FY25 numbers. FY25, not FY26. I don't know what the growth numbers are, maybe the management will tell us, but assuming that there is some growth, it is actually sub 50. Now, you could argue 50 is expensive, but we're seeing stocks at 70, 80 even now. Yeah. For a company that is showing this growth, and of course, you got to discount now that if there's a change, then what's the kind of multiple de-rating, but it's not egregious. It's expensive, but it's not like egregiously expensive for a stock that is delivering.
It's not 100 plus.
Yeah, something like that. So it could be interesting.
Yeah, Neeraj's favorite word is egregious this entire result season, and why not? Some of the results reported have definitely been egregious. So that I agree. Garden Reach, not so great. Thumbs down for Garden Reach. So I have 2 misses and 1 hit on my list. They've missed estimates, which is why a thumbs down. Revenue was up 37.7% at 1,271 crores, but estimates were penciled in at 1,324 crores. EBITDA was up about 55% actually at 75.3 crores. Estimates were 82 crores. Margins at 5.9% versus 5.3%. You look at it optically and you'll say, yes, okay, they've improved year on year, but estimates were 6.2%. Net profits also up 11% versus estimates, at 98.2 crores versus estimates of 115 crores. So they are confident of a good set of numbers even in Q4. The order book remains strong. This is what the management is saying actually in their calls. Their ongoing projects are progressing well. They're expecting more orders in the coming months. But the defense capex, while being decent, hasn't shot up that much. The defense space not looking like it's the hottest, and the numbers are below estimates. So, which is why I expect more pain on a Garden Reach. And I guess your first stock as well.
Yeah, absolutely, no doubt. Power Grid Corporation of India, a disappointing set of numbers to say the least. And let's talk about the headline numbers first, right? Because you have a downtick of about 2.75% in the revenue number. But more important is the operational metrics here, where you're talking about the operating profit, which has declined by 6.6%, come in below consensus estimates at 9,538 crore rupees. The estimates had pegged it at closer to 10,270 crore rupees. And the margin has, in fact, narrowed by as much as 350 basis points and come in at 84.9. Here, too, the expectation was 86.5%. What has happened? The top line is actually declined by 1.5%. This actually should be a thumbs down. It's been indicated as a thumbs up, but it should be a thumbs down. The top line has fallen on account of a 1.5% decline in transmission segment revenues. And in fact, the EBITDA is under pressure on account of a rise in certain pockets of expenses. The bottom line was impacted by a 208.6 crore deferred tax expense. But purely from the perspective of a contraction in the margins and a decline in the revenue from its core segment, certainly something that you should watch in trade today. Of course, the valuations are higher than the 3-year PE multiples, but it hasn't done anything over the course of the last 1 year, so bear that in mind as well. Let's talk about Tata Chemicals, which is also a thumbs down, and this is quite a shocker actually, because it's posted a loss of 53 crore rupees compared with a profit of 158 crore rupees, and the estimate had pegged it at a profit of 191 crore rupees. The margin has actually contracted, and you have the EBITDA, which is also down about 20%. But what is the impact that has caused this? You had a revenue impact on account of an adverse price movement of soda ash, which the company spoke about. China soda ash prices, by the way, have fallen quite sharply by 25 to 30%, and the pricing pressure is what has impacted the margin structure. There's also a higher fixed cost in the US on account of a plant production shutdown that affected the financials. And the net profit impact on account of exceptional charge was 70 crore rupees. There's clearly an issue here, and we will likely hear more over the course of the day as we get more information on this. Castrol India is the third, and this is a thumbs up, and this is a revenue increase of 7%. It has more or less matched the estimates, the consensus estimates. Where it has improved on and come in significantly better than expectations is the margin number. That's come in at 27.8% compared with 26%, so it's an expansion. The expectations had pegged it at 22.4%. So there may have been one of a few possible factors that came into play, either pricing, which may not necessarily be likely, or there could be an inventory fallover or from the previous quarter. Crude is something that you should watch very closely. Has that had a bearing on the earnings? But whatever that the case may be, the PAT is up as much as 12%.
Yeah. You know, the other one which is as promising as a stock of the day as Premier Energies, if you will, is NLC India to my mind. Just a wonderful set of numbers by a company. Revenues up 39% at 4,411 crores versus the estimated 3,033 crores. Margins at 41.4 versus 28.6. The estimates were 21. They delivered 41% margins. Happens with cyclical businesses, but I'm just saying that it's a brilliant quarter. Net profit at 668 crores versus 250 crores. The estimates were 244 crores. Beaten on all counts. There might be some exceptions, some this, some that, but on margins you can't have exceptions. On margins at 41.4 versus 21.7 estimated, it's a big beat, and I believe that this will prop the stock up today. I repeat, it's a cyclical business. Please be careful. If it's starting off with a large gap up, don't chase it. But good numbers should get rewarded today. I almost included Gland Pharma because it's a really strong set of numbers, but I'll choose Shalby as a thumbs down because we need to balance it out maybe. So Shalby came out with a shabby set of numbers, unfortunately. Revenues were up 27%, which is actually okay, 276 crores, but the margin performance at 12.3% versus 19.6% and an estimated 18.6% left a bit to be desired, as a result of which there was a net loss of 1.8 crores. The estimates were a profit of 19 crores. So one thumbs down. Sorry, you want to add on Shalby?
No, not on Shalby. We'll finish with that.
Okay, and the third one I've chosen is a brokerage name. Maybe we'll talk about it a bit later on, maybe at 9:05 again, but I think PCBL deserves a mention. The stock has had a wonderful re-rating, but look at the UBS note and the assumptions that they've put in for why they like it. So of course, PCBL they've initiated a coverage on this one. They say it's in the midst of a transformation and a re-rating to follow. The target is 600, by the way, which is a 50% upside nearly. They say it's transforming into a chemical technology platform, whatever that means. But the most important line, 27% earnings CAGR over 5 years from FY24 to 29. Viewers, a 25% CAGR doubles your stock in 3 years. They are saying a 27% earnings CAGR over 5 years with ROCE expanding from 17% to 29%. If UBS's assumptions come true, This is great for the shareholders of the company. Now, let's see if the stock reacts. My bet is that on a good day today, this one might see a bit of a positive reaction. So watch out for this one as well.
Well, that's been, I think, if you look at one of the key stocks of 2024, at least, PCBL has definitely been one of them. Now, I just wanted to add on Garden Reach because, you guys write to us on our live YouTube while we're doing this show. And yes, we're listening. There was a query on Garden Reach's dividends. And yes, the dividends have been announced. It's actually their highest ever dividend at 8.95 rupees per share. So yeah, even though the numbers might not set fire, dividends have been announced.